Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I am your host, Juan Vargas. Today on the show, we have somebody very special. If you haven't heard of him, then you may be hiding under a rock because his name is Garrett Sutton. Garrett is a corporate and asset protection attorney and an advisor for Robert Kiyosaki's Rich Dad series. He's the author and co-author of 10 must-read books. Some of these books include Start Your Own Corporation, Writing Winning Business Plans, Run Your Own Corporation, and Loopholes of Real Estate. His company's Corporate Direct and Son-in-Law Center assist investors and business owners achieve their goals with asset protection, corporate formation, and limiting their liability. So Garrett, welcome to the show.
Thanks, Juan. It's a pleasure to be with you today.
Thank you so much. It's more of a pleasure to have you here and share your wealth of knowledge with my audience and me. And I'm sure we will definitely learn a ton. So I guess, let's get the show started with telling us where you're calling us from, and also tell us a little bit about your background before, getting into what you do now, which is asset protection.
Well, I grew up in the San Francisco Bay Area. I attended the University of California there in Berkeley, and then went across the Bay to Hastings Law School, which is the University of California's law school in San Francisco. And I'd always spent my summers up at Lake Tahoe and really enjoyed the mountains. So in 1989, I moved from the Bay Area up to Reno. And, Reno's a great place, not only for skiing, but to set up corporations. So I've been lucky to live here. I got married here, have raised a family here in Reno. And we like to use Nevada corporations. As we get into the discussion, we also like to use Wyoming entities. So I've been a corporate attorney since way back when, and I really enjoy working with Robert Kiyosaki and the Rich Dad group. We travel around the world. Last year we were in South America teaching people financial education because his message applies all over the world, not just the US, but we were in Argentina, Paraguay, and teaching people how to advance their interests as well as protect their assets has been really rewarding. So being part of the Rich Dad group has just been a great rewarding experience for me. And I've been able to write these books, and people seem to appreciate the information in them. And so that too has been rewarding.
Yes. And, I did discuss, or I did kind of mention some of the books that Garrett has written. I have a few of his books. I mean, for those of you guys that are, watching on YouTube, you got to pick up a copy of some of his books, or, all of his books really. But Loopholes of Real Estate, here's one that I'm holding right now. Ton of valuable information for you guys to learn and to pick up. And so, yeah, thank you so much for writing these books and sharing them with us. So, let's get this show started with, I want to ask you the basics. Let's start with the basics. What is asset protection and why is it important?
Well, asset protection is a way of structuring your affairs so that you can protect what your net worth is and how you are going to grow your assets with your family. We want to protect those assets right at the start. And so one of the reasons for asset protection is because the United States is a very litigious society. There are just all sorts of lawsuits all the time. And you and I aren't going to change that, Juan. I mean, that is the landscape that we live in. Attorneys in the United States can sue and keep a percentage of what they collect. It's called a contingency fee lawsuit. The attorney brings forward the lawsuit. They put in all the time and the money, and they get to collect 30 to 40% of the lawsuit. So we have to understand that there's an incentive for people to sue. Now, this is not to say that the contingency fee system is bad. Some people who were in a car wreck, they don't have the money for an attorney. So, the contingency fee system does help people who need to get into court. It allows them to be heard. But when you have assets, you have to understand that attorneys do benefit from suing. And so we want to put together structures that will allow you to be better protected. So for example, if you have a duplex in your individual name and a tenant sues over something that happened at the duplex, and of course you're going to have insurance, but maybe the insurance doesn't cover you or it's a very large claim. If the duplex is in your individual name, right, you are personally responsible for that claim. They can reach not only the asset of the duplex, but all your other personal assets. They can reach your bank account, the equity in your house, all of your other assets. So by taking the simple step of putting the duplex into an LLC, they're not able to reach all of your personal assets. We're encapsulating that liability into one LLC, thus protecting you from being sued personally and having them reach your personal assets. So that is the main reason we do this, Juan, because it's a litigious society. It's going to stay that way. And the states, all 50 states, allow us the ability to set up corporations and LLCs to protect ourselves. There's nothing improper with doing this. All states allow for it. And so we're just going to use the tools that the state provides and do the best we can to protect ourselves.
Yes, I love that. And this is something that, not everybody, the average person doesn't necessarily think of this. They think that, things are going to be okay. And, you have to take this seriously. If you want to grow a business and you want to protect, a business, then you got to be able to learn this, and you don't have to know it all, but, you have somebody like Garrett on your team that can, watch your side and protect you on that. And so I think, a lot of us, we want to get into real estate, specifically, that's what the podcast is about, more on real estate. We want to get into real estate to be able to live life on our terms, right? So, and we, right, in order to do that, you got to be able to acquire more and more assets. But what's the benefit of having all these assets if you're not protected and you can just, and with one, litigation, they're all gone, so you have to make sure that you protect, your assets, you protect yourself, you protect your personal assets. It's just way too important, so thank you so much for sharing all the information. So you said, that, we have to have, asset protection. I mean, when do we have to have it? Like if we have a personal home, do we have to have, should we have a personal home under like a, an entity structure, or is that not, is it okay just to leave it and just have it like an umbrella policy? When do we have to have an entity over an umbrella policy?
Well, that's a good question. So we have to distinguish between the house and the rental property. The house, the first way we're going to protect the equity in our house, which we need to protect, is with the homestead exemption. And you're lucky, Juan, because you live in Houston. Texas has the best homestead protection possible. When they were an independent republic, they're trying to get people to settle there. They instituted what's called the homestead exemption. And in Texas and Florida, that someone who sues you later after you buy the house can't get the equity in your house by the simple homestead exemption form. That equity is protected, even if your house is worth $2 million, whatever it's worth. They can't get the equity in your house. So you're living in a great state for the homestead exemption. Now, other states have a dollar limit to it. So for example, California, the homestead exemption for a married couple is $100,000. So if you have $1 million home, which in California these days is maybe a shack, right? If you have $1 million home in California and you only put your homestead is only 100,000, that's 900,000 that's not protected. Someone could reach that if you were sued. So the question becomes, do I use an LLC to hold my house? And the answer is yes, you can. So we just have to look at everybody's individual situation when it comes to protecting the equity in their house. When it comes to protecting the equity in your rental property, I think you need to set up the LLC right away. That's the best way to do it. And like you were saying, Juan, they don't teach this in school, right? It's not a topic that anyone knows about. So you have to go out and get this information. And that's why I've written the books, to help people understand it. But like you also said, you don't have to master this. You just need someone on your team who understands what you need to do and set it up at an affordable cost. So I always recommend that insurance is the first line of defense. You're not going to rely on an LLC for your rental property alone. You're going to have insurance. That's the first line of defense. And in some cases, you may have an umbrella policy over the rental properties. But the LLCs are most definitely the second line of defense, because sometimes insurance companies don't cover you. Sometimes they have exclusions where they deny coverage, or the insurance amount you have isn't enough to cover a very extreme claim. So we want to use the LLCs right off the bat, because as long as you have that property in your individual name, you can be sued personally. So let's say you buy the property and a year later, you finally put it into the LLC. For that 1 year period in which it was in your individual name, you're personally responsible. So it's best to do it right away.
Got it. So how does that work when, something happens and I don't know, let's just say somebody, you have a rental property or a multifamily property. I know the majority of my audience is multifamily. So let's say you have, a smaller tenant unit, right? We have a tenant that, she falls on your property, she hurts themselves, and, you have, an entity, LLC, right? Hopefully you have an LLC for your asset. Can they go back, if they don't, go through a litigious situation at that moment? Can they go back years later? And if so, how many years can they go back after that incident happened?
Well, in each state has what's called a statute of limitations, whereby there's a time period in which you have to sue. And this started with the Roman Empire. I mean, they've had statute of limitations for a long time, because it's not fair for people to be able to sue for something 20 years later. Right? You have to be able to sue on a timely basis. Each state has a different time period, but generally for a personal injury, it's between 1 and 2 years that you have to sue. For a contract, it can be 4 to 6 years. So that 1 year period where the property was in your individual name and then you put it into the LLC, Nevada's a 2-year statute of limitations. So after it's been in an LLC for 1 year, they can still go back and sue you personally because it was in your name for 1 year. So that's why we like to do this at the start. And some people have this misperception that asset protection is horribly expensive, and it's not.
No, it's not.
It's just it's like another form of insurance. Right? You're just putting forth another insurance policy to protect yourself.
Actually, I was going even a step further and say it's expensive not to have, asset protection. If you're, if you don't have asset protection, you're pretty much playing with fire, and so it'll be way more expensive. It'll be way more costly if something were to happen. Let's hope that nothing happens, but in this world that we live in America that we live in, things happen every single day. So, again, I can't stress how important it is to have that. So now we talked about, asset protection and having a property, proper entity structure set in place on a property, let's say, right? So let's say you do have that LLC, we'll get into those entity structures here in a little bit, but let's say you have an LLC in place already. I mean, is there any, kind of a litigation that they can still get you for, even if you already have, your entity structure in place?
Great question. Here's what can happen. So you've spent the money to set up the LLC, and you've put title to the property in the name of the LLC, and then you get sued. If you don't follow the corporate formalities, which apply to LLCs, if you don't follow these simple steps along the way, someone suing can say, hey, you didn't follow the corporate formalities. This LLC really shouldn't be protecting you, and I want to go after you personally. I want to pierce the veil and go after you personally. So how do we prevent them piercing the veil of protection? Well, you have to pay the annual fees to the state. If you don't pay those annual fees to the state, you're not following the corporate rules, and someone can easily get through the corporation to you personally. You want to do the minutes, which shows that you had a meeting and you prepared the minutes of that meeting. You want to do that at least once a year. And people say, oh gosh, I just can't stand the idea of doing minutes. It takes so long. But notice they're called minutes, not hours, all right? These are not hard to do. You want to just do this on an annual basis. As well, you need to do a tax return, right? You're going to work with your CPA, but make sure that the tax return is done. You're going to need to have a separate bank account for that LLC. You can't operate your corporate or LLC entity through your personal bank account. You can't commingle the money like that. If you do, someone has a very clear shot at going after you individually, piercing the veil and going after you individually. And, you know, we mention these requirements and they're not that tough to follow. The big thing is if you don't follow them, it can be pretty dramatic. They can get through the corporation of the LLC to your personal assets. And so Juan, we've done a survey, and throughout the country, when people try and pierce the corporate veil, how often do you think it's successful? What would be a guess?
I mean, yeah, I wouldn't really know on that. I mean, yeah, you tell me.
50% of the time it's successful.
Wow.
Yeah. Yeah, it's really surprising.
Yeah, I wouldn't have known it was that high. Yeah.
It was really surprising to me too that it was that high, but 50% of the time. And it's interesting, in California, Texas, and Florida, they pierce the corporate veil all the time. So by following these simple steps, it won't happen. But just know if you don't, someone has been using the court system to pierce the veil.
Yes. I mean, that's just another reason. I mean, it's just reason over reason, and to make sure you're set up properly. So I want to discuss, you know, I guess we can go into detail if you like. I want to discuss the four, you know, major entity structures that are common, that are used. Tell us a little bit about each one and what is the best fit for each one.
Okay. Well, we do have good entities. We have bad entities. Holding title in your own name is bad. Using a sole proprietorship or a general partnership for your business is bad because there's no asset protection. But the good entities would be a corporation, right? And we have a choice between a C Corp and an S Corp. They're both corporations. They're just taxed a little differently. The C Corp, you pay tax at the corporate level. And then when you distribute the money to the shareholders, there's another tax. So you have double taxation with a C Corp. The S Corp, you get permission from the IRS to operate as an S Corp, and that is flow-through taxation, where there's no tax at the corporate level. All the tax obligations flow to you personally. So those two are pretty good for business. For real estate, I like the other two, the LLC, the limited liability company, and the limited partnership. Those are the good ones for real estate. Now, the LLC has become the most popular entity there is now. I mean, they only started in Wyoming in the 1970s. And since then, all 50 states have allowed for LLCs. And people are using them for business now too, because with the LLC, you can be taxed however you want. You can be taxed as a C Corp. You can be taxed as an S Corp. You can be taxed as a partnership. It can be considered a disregarded entity where it flows right onto your personal return. So the LLC is the most popular choice. And if we use the right states, the LLC gives you really great asset protection. So Nevada and Wyoming are the two states we like. Texas is a good state, but there's a court case that came out recently where they weren't protecting the single member, the one owner LLC. So Texas is good, especially if you have two or more members. But, you know, so we have these four choices. It's not one size fits all, because there will be times when you'll use a corporation for business where you want to get medical benefits or whatever. There are subtleties there. But as a general rule, certainly for real estate, we're going to use the LLC. We're not going to put real estate title into a corporation. That's kind of a rookie mistake. It's not a good way to go.
Right.
And so just know that we're going to use the LLC for real estate. And that's what most of your listeners are doing, right? That's the key thing they're investing in. And so the LLC is the right entity for them.
Got it. So LLC is the way to go on real estate. Why, just real quickly, why would we not go with like say a C corp or an S corp for real estate?
The issue has to do with taxation. So with a C corp, let's say you have a $400,000 gain on the sale of a piece of real estate. With the C corp, we'd have to pay tax at the corporate level. Right? And then we want to get the money to the shareholders. So we'd pay tax at the corporate level, then the shareholders would have to pay tax again. So on a $400,000 gain on the sale of real estate, with a C corp, we're going to pay almost $90,000 more in taxes. So Uncle Sam really wants you to use a C corp for real estate. But if you're approaching investors, they'll know you don't know what you're doing if you suggest holding title to real estate in a corporation, right? So don't make that mistake.
Yeah.
Now with the S corp, some people in the past have used it, but for example, when you're going to refinance property, with the LLC, you can move the property in and out at its basis. There's no tax. With an S corp, when you move the property out to refinance, a lot of times they say we want title in your individual name. You refinance, you can put it back into the entity. With the S corp, when you transfer it out, that's a taxable event. You have no intent to sell it, but it came out of the S corp, so you got to pay tax on it, right? So that's not good for refinancing. The LLC is just a much better way to go. The limited partnership does make sense in certain cases. Say mom and dad are going to be gifting real estate to the kids. Right? Mom, with a limited partnership, you have to have a corporation or an LLC to be the general partner. Mom and dad are the general partners, and they're in absolute control of the entity, even though they only have as little as 2% ownership. So they've gifted to the kids, but they want to keep managing it until the kids are old enough. The limited partnership is a good way to go. But that said, in most cases, we're going to use LLCs.
Got it. So I would say to summarize it, the biggest hurdles or the biggest disadvantages is, more taxes, unnecessary taxes. And, the LLC can provide you with getting taxed at the personal level, if you so choose. And, it can provide you with a good asset protection as well. So,
and that's the other thing. Yeah. The LLC offers the charging order protection, which the LP does in the right states. California doesn't offer any charging order protection really, but the LLC gives you better asset protection with the charging order than a corporation does. The corporations in all states except for Nevada do not offer charging order protection. So that's another reason to use the LLC.
Got it. And what exactly is a charging order?
Good question. That is the key feature of asset protection. And what it is, Juan, it's a lien on distribution. So if you get sued, they can't go in and force you to sell the assets in the LLC, right? They'd like to. They want to collect from you. They want to go in and force all the sale of all the assets. The charging order says, no, we're not going to let you do that. If you have a judgment against Juan, you will stand in his shoes and receive distributions, right? So instead of them being able to force a sale of all the assets, they have to wait until the LLC makes distributions. Well, the LLC may not make distributions, right? Especially if we use Nevada or Wyoming, where we have protection. So the key in all of this is having enough insurance, umbrella policies, whatever else, and then having all of our LLCs in our various states owned by one Wyoming or Nevada LLC. And in that case, the person who's in a car wreck against you is trying to get at all your real estate. They'd love to get at your Texas LLC, your Utah LLC, but those are all owned by one Wyoming LLC. And in Wyoming, the only remedy is the charging order, meaning they have to wait till distributions are made, which may not be made. And attorneys suing you realize that this is a problem. They don't want to sit around and fight in the state of Wyoming to get distributions. They would rather go on to the next case that has insurance, right? So this is a roadblock. This is a deterrent to the attorneys. You're going to have enough insurance that the attorneys can go after. Then you're going to have this Wyoming or Nevada LLC that they don't want to fight over. They're going to go on to the next case that has more insurance. So we set it up in a way that it is a deterrent for attorneys to try and get at your assets. Now, you've been prudent. You have insurance, right? You've covered yourself with insurance. If you're in a car wreck, there's insurance there, right? It's just we want to have this deterrent for someone trying to get at your other assets. And that's how the charging order comes into play.
Yes. So for attorneys that are looking to help somebody else with litigation, I would say that, the more, like you mentioned, having a Texas LLC and then having a Wyoming LLC over that, then, that's just more work for them to have to deal with. And so it kind of turns them off and turns them away and would rather not, go through all that. Right. I mean, well, simplest terms.
Yeah, attorneys are rational economic animals. I mean, they're going to go where they can get the money. And the next insurance case is a much easier way for them to get at money than fighting this rearguard action trying to collect from a Wyoming LLC. Yeah. It's just not a very good use of their time.
Yeah.
So you just want to set it up in a way that provides protection. You're going to have insurance. I always recommend that people have an umbrella policy of insurance. An extra $1 million of umbrella coverage is only $400 a year, right? It's not expensive insurance. That's what the attorneys know how to get at. That's the pot of red meat that they know how to get at, and then have your other assets protected with LLCs.
Got it. And I want to go back to earlier where we mentioned Texas, and I'm mentioning Texas because I live here, but in a big part of my audience is here as well. But you mentioned Texas, and the fact that there was a case just recently that you said that it was a single member LLC, and how it wasn't as good as a Nevada or say a Wyoming because they have better. I guess what is it? What is it better about those?
The court allowed in this one single case someone to go after the LLC because it was only owned by one owner. And I haven't seen, we monitor these cases and the states, and I haven't seen anything else come of it. I would think that if it was a big issue, the Texas legislature would change their law like Nevada and Wyoming have to say, we're going to protect the single member LLC. And that case may have come out, but I just haven't seen it. But I still think that if you live in Texas, having that Wyoming LLC own all of your Texas LLCs, again, creates another barrier, right? If we do it right, the law of Wyoming applies. The law is very restrictive. There are strategies where we can make them have to go to Wyoming to fight the case. That is a deterrent. So we just want to put these pieces in place that will give you enough insurance, but also give you the protection of these LLCs. Now, Juan, when I mention Wyoming, it's important to know it's only, once it's set up, the fee to the state of Wyoming is only $50 a year, right? So it's not expensive. In California, it's $800 a year.
Oh, wow.
But in Wyoming, it's only $50 a year. And then for us to be the resident agent up there in Jackson Hole, where our office is $125. So for $175 a year, you've got a pretty good additional insurance policy for your protection.
Yeah, and I like that, and that makes 100% sense. Is this something that you recommend for somebody just starting out, or do you recommend this for somebody that has built up a good sized portfolio and assets?
Well, that's a good question. I mean, if you're just starting out and you can only afford one LLC and you've got a property in Texas, I would have the Texas LLC, right? Because you're doing business in Texas. If you get sued by a tenant, Texas law applies. So I would have that Texas LLC at the start. We can always have the Texas LLC owned by the Wyoming LLC at a later date, all right?
Got it.
But the best protection would be to set up the Texas LLC for the Texas property and then have it owned by the Wyoming LLC.
Got it.
Then you buy a property in Florida. We set up a Florida LLC for that property, and it's owned by that same Wyoming LLC. We don't need to set up a new Wyoming every time, right? It's just the one holding entity for Texas LLC, California LLC, Florida LLC. That's the structure we like.
Got it. Yeah, that makes sense as well. Now that we have been discussing Texas again, what is your opinion on the Texas series LLCs? And should we use them, or should we just have like individual entities for each property? What do you think about that?
I'm not a big fan of the series LLC in any state. They're just too new. We don't really have any court cases on them. We don't know what happened. The idea, just for your listeners, the series LLC says we're going to form one LLC, and then underneath that one LLC, we're going to have series 1 that holds a duplex and series 2 that holds a fourplex. So we only need one LLC. We've got 2 series underneath it. And the idea is that there's an internal shield of liability between the first series and the second series. We don't have any court cases on that. We don't know if that's going to work. Secondly, in bankruptcy, if the first series goes bankrupt, there's no guidance. What happens to the second series? Is it brought into the bankruptcy or not? So I'm just not a big fan of these until they get fleshed out. There was a case in Louisiana where someone used a Delaware series LLC in Louisiana, and it went to court, and in Louisiana, they don't have the series LLC. And so the court got all confused. They didn't know what to do with it. The case, it was the Arch Bay Holdings case, and they sent it back to the lower court to say, you figure it out, because the judges didn't understand how to do a series LLC in a state that didn't allow series LLCs. So you really got to be careful on using these things. And it's not expensive to set up these LLCs. So my recommendation is just to use separate LLCs. We absolutely are certain that you have protection between one LLC and a second LLC, right? We don't have that understanding with the series LLCs.
Got it. It's a proven model, like to have separate
Right.
LLCs and separate properties, and it's not proven yet. We don't have enough information on the series LLCs. Thank you so much for sharing that. So you've provided us with a bunch of information, a ton of value. How do we stay up to date with any changes that happen, in asset protection?
Well, that's a good question, Ron, because it's changing all the time. I mean, this is a dynamic field of law. And after 2008, when the collapse came, and there were all sorts of court cases on new LLCs, so it is ever changing. What we do is we provide a newsletter at Corporate Direct. So you can subscribe to this newsletter and keep up to date on changes that are happening within this field. And it is important to stay up to date because things do change. And this is important stuff. I mean, we're talking about your family and your future, and you want to stay up to date on this so that you're protected into the future.
Got it. Yeah. So I guess it's time for our nuggets of wealth. These are questions that I ask every guest every week, and hopefully they are able to help our guests and our audience. So we'll go ahead and get that started. What key tip or advice would you give to those who are looking to save money, saving or setting up their LLC online? Somebody is rather not, wanting to hire somebody like yourself. They want to set up their entity online. What would you say to somebody like that?
Well, I wrote about it in Start Your Own Corporation. I'm holding up the audio version. People really like audio these days. So we've done all our books in audio. We talk about it in Start Your Own Corporation, the $99 incorporation. And we've tested these services, And in many cases, all you'll get are the articles of incorporation. You won't get the operating agreement or the bylaws. You won't get the minutes. You won't get the issued stock. If the IRS comes calling on an audit and they don't see stock that's been issued, that's a big strike against you. So you want to use a service that will give you everything. And I'm not saying that all online services are bad, but I just think that you want to talk to an attorney or someone who is knowledgeable in the field, because too many times, Juan, we've seen people go online and set up a corporation to hold real estate. That is, as we've discussed, a really bad way to go. So you want to work with someone who will understand what you exactly need and set it up properly. So we charge a very affordable fee to set up the articles, the operating agreement, the minutes. We issue the stock. We give you a book that shows you how to do the minutes. It is an affordable process, but when you compare apples to apples, we're about as expensive as some of the other online providers when you really get down to it.
Got it. What is a key tool, source, or platform that you use frequently that can also help others? And I know we are talking about asset protection more than anything. What would you say to the listeners and that can help them?
Well, again, our newsletter, we keep people up to date on asset protection. So I don't like to go to too many places to get all the information. My phone does not have a bunch of apps on it. So I like, getting a source that I can trust and then use it. And so that's what we do, is we provide a newsletter with up-to-date topics and articles on asset protection.
Got it. Okay. What book are you currently reading?
Right now, I'm reading The Saga of Lake Tahoe. I love history, and I work with a historical society up there at Lake Tahoe. And so that's the book I'm reading right now. The history of Lake Tahoe is fascinating. So it's not a real estate book. It's not a business book. It's just an enjoyable book to read.
Got it. And I guess, can you tell us a little bit more about your books? I know I mentioned them briefly at the very beginning, in our introduction, but can you tell us a little bit more about your books? I know, like I said, I mentioned Loopholes of Real Estate. Tell us a little bit more about your other books.
Well, I've written Writing Winning Business Plans that you mentioned, and Start Your Own Corporation. And we've had both those books translated into Spanish because we have a lot of followers that would benefit from having it in Spanish. I've written Finance Your Own Business here with credit expert Jerry Detweiler. And it does talk about how to finance real estate in there, or use SBA loans and all. So I think that is a really helpful book for people. And then we talked about this before, Juan. I wrote this book called Toxic Client, Knowing and Avoiding Problem Customers. And I think it's important when people are starting out in business or investing to understand that there are all sorts of people out there, and some of them are not very nice. Some of them will waste your time. They'll sap your business. They'll demoralize your employees, and you have to know how to deal with those people. You can't let these kind of problems linger. And so that's why I wrote the book, for people starting out in business and real estate, to know how to. A lot of times you don't even know that these people exist, right, until the first one comes along. So the book identifies these types and helps you understand how to deal with them.
And are all these books on Amazon, or where can we find these books?
They're all on Amazon. For some reason, I can't sell them cheaper than Amazon does. So,
okay. Well, then definitely, guys, check those books out. There's a ton of value in those, and I'm sure they are well worth it. So, Garrett, I just want to say thank you for everything. Where can Commit to Wealth Nation go to contact you and find out more about your company's Corporate Direct and Sutton Law Center?
Well, the best place to start is at corporatedirect.com. And we do offer a free 15-minute consult with an incorporating specialist. So if you have questions, you can call up. The number is 800-600-1760. And you can talk to someone about incorporating, find out what our fees are and how we can help you. And then just the books. I mean, the reason I wrote these books, Robert Kiyosaki is big on educating people, especially on topics that they don't teach in school. I wish they did teach these kind of topics in school, but Robert has tried in the school systems, and they have their program that they're going to follow, and it doesn't include financial education, unfortunately. But just reading the books helps you. You don't have to be an expert in all of this, but reading the books so you understand the lay of the land, and you're better able to talk to your professionals. Once you've read the books, you're better able to talk to your CPA, your attorney, as to how to bring them on the team and how to use their services efficiently.
Yes, I love that. Thank you very much for sharing that. You don't have to be the A player. That's why we have you for that, So thank you so much for sharing that. Well, Garrett, you have definitely provided us with a ton of value and a ton of information. And so hopefully, our listeners can pick up on a lot of these, key areas and reach out to you, if they are in the process of setting up their own entity or any kind of questions that they may have. Please reach out to Garrett Sutton. So thank you very much, Garrett. I appreciate your time, and I wish you continued success.
Thank you, Juan. And you're doing a service to all your listeners. This is good information that you're getting out to them. So thank you for this too.
Yeah, thank you very much. It's good information that I'm picking up as well. So it's not just my listeners, but me as well. So thank you very much again, and I appreciate your time.
Thank you.
Okay.